Mike Murphy, Steve Cortez, all of them. Right, I'm going to start with oil. We're seeing oil stocks down, the price of oil down. Is that hurting the market? Todd Horwitz, to you first.
No, I don't think it's hurting the market. Good morning, by the way. I think that oil's going to 40. The market has now found some price volatility, and it wants to work its way lower, but I do not think that they are correlated. I think they are independent investments. Oil's going down, the market's going to go down, but not correlated.
Okay, so he's agreeing with your Webster ratio.
Yeah, and well done, and thank you for that. Listen, I was at the stock exchange yesterday covering the action in the afternoon. A lot of traders came to me, and they were blaming algorithms for the 400-point drop, and these algorithms that are not only set into the numbers, but to the words that Fed officials say. If you get X number of words said in the same speech, sell.
Really?
So down 400 points. They said in the old days, you may have had a big drop, but you would have had people come back in and nibble a bit more.
Humans stepping in when they see mispricing
so he said,
in the market.
Our hands were off the whole thing. It goes down 400, it comes back 200. That is what computers do to us today.
Going on?
Not an exact number, but roughly 60% of the daily volume on the New York Stock Exchange, or on all the exchanges, is computerized programmatic trading. So my biggest concern is we all remember the flash crashes that have happened when all the algorithms, or a bunch of the algorithms, are on one side. That could cause a massive sell-off in the market, whatever market it may be, whether it's in New York, the NASDAQ, oil, whatever it is.
Well, Steve Cortez, what do you make of this? I mean, how on earth do you trade a market like this? How do you invest in a market like this if it's got nothing to do with what the Fed might do or what the price of oil might do? It's all about algorithms?
Well, I don't think it's all about algorithms, but I do concur that I think market structure is a risk here. And if we have a serious credit event, I think things could get very violent. I think this is one of the unintended consequences, by the way, of government regulation. Government, when it regulates, it almost always does so poorly. And the Volcker rule, while well-intended, what has it really done? It's mostly taken the banks out of the market, out of committing risk capital and keeping things more orderly and having more human oversight in the market, and instead has handed it over largely to machines. So I think the Volcker rule, paradoxically, has made markets potentially much more dangerous for participants.
Well said, because we are now down 150 points. The Dow's at 18.1. Got to talk about Wells Fargo. They are eliminating product sales goals in retail banking. It starts January the 1st. They are trying to rebuild trust. All right, Emac, give me the story.
Yeah, this may not be enough. Now, Senate Banking may have a hearing on this. Senator Elizabeth Warren and 4 other senators are sending a letter saying this needs to be probed. How did 5,300 workers who got fired do this over 5 years without management not knowing about it? The bank refunded $2.6 million back to customers, and they paid more than $185 million in fines. But also, Moody's is threatening Wells Fargo with a downgrade. The stock's under pressure, and the Consumer Financial Protection Bureau says they have 30,000 complaints in its computer. This may be more widespread beyond Wells Fargo. Other banks may be doing it.
Mike, would you sell bank stocks because this thing might spread?
I would sell Wells Fargo because this thing might spread. I think, Stuart, the biggest problem we have, the people in the big banks haven't learned from the financial crisis. When you tie someone's pay directly to something, an incentive like getting a new account, someone there is going to try to game the system, increase their pay, and that's what you had here.
But if you take incentives out of the system, you take a lot of the profit motive out of the system, and your results are probably not as good. Todd, go ahead. What do you got to say?
I mean, why would they take away that? Listen, banks are notorious for doing a lot of bad things. You can go back to the J.P. Morgan whale trade. You think that was really the first time that guy made that trade? They made a ton of money while he made the trade, so they were happy to pay the $5 billion. They do this all the time. This is not news. They're always doing things that are not quite to the rules. But as long as they keep taking the cash, they don't care until they get caught. When they get caught, they pay the fine. I think that's more the issue we have to worry about, is how they do business.
All right, well, Dodd-Frank doesn't seem to be working in that particular area now, does it? Let's check the